Alright, what's up everyone? Welcome back to the channel. I'm Tokenicer, and I'm here to bring you guys in-depth news, analysis, and insights from the digital asset space, along with covering the progressive tokenization of the world. And if you haven't already, be sure to hit that like and subscribe button to help with the algorithm, while also checking out Tokenicer.network for all my content platforms linked right in one spot. From my Twitter threads, Medium articles, Spotify podcasts, and so much more. And as always, they'll be right down in the description below. So in today's video, we're doing an updated portfolio reveal. We did one of these a while back earlier this year in late February, and it feels pretty surreal that it's been that long, and I'm so proud of all the different utility projects and connections we've dug up since then. So while a fair bit of my allocations have changed, there's still a lot of adjustments I'd like to make towards my personal portfolio. So what I figured I'd do is, instead of just showing you guys my current allocations, I'll instead show you guys what exactly my ideal portfolio allocation will look like, and of course my reasoning behind that too. And so the main reason why my portfolio isn't the way I want it to be yet is largely because I'm waiting for many of these projects to fall into these accumulation targets of mine to pick them up for a better price. Since, well, we technically are still in a bear market and the trend is still down for the most part, right? And as usual, if you guys want to learn to understand the markets better using every type of data and information at your hands, whether it's technicals, fundamentals, or on-chain data, be sure to join our ChainStats Discord community to come in and learn from a group of like-minded people, or just chatting with myself and other members about anything DLT, fundamentals, or technicals related. And as always, just before we get started, I just got to remind everyone real quick that I'm not a financial advisor, and therefore nothing you ever hear or read from me should ever be taken as any form of financial or investment advice. But now that we got that out of the way, let's get right into it. So, to start off with my largest position, nothing's really changed there yet, and I'm sure you guys have figured out what it is by now. That's right, it's still Quant Network QNT, at just a little over 50% of my portfolio ideally. And again, this isn't my exact portfolio at the moment, but rather just how I plan to build it once my accumulation zones are all hit. But at the moment, QNT is about 68% of my portfolio. As I build a little closer to what I find ideal, I expect that percentage to shrink a bit, not because I'm selling my QNT. I don't plan to do that for a while, but just more so because it'll probably be further diversified with more projects by then. Now, as for the reasoning, I could just link the quant deep dive we covered a while back right up here, but that'd be a little lazy, wouldn't it? So the reason behind why QNT is my largest holding is largely because of the operations of their network overledger, being to allow for a world of universal interoperability across all DLTs and legacy systems. Not only is the vision of their operations just absolutely massive in terms of total addressable market, as universal interoperability is about as large scale as it gets, but the connections and expertise within their team, largely thanks to Gilbert Verdian, and the massive partnerships and standard-setting bodies that they work alongside with, such as ISO TC307, founded by Gilbert Verdian, which is literally the ISO standard for blockchain and DLT. It really doesn't get much more legit than that. Next up is Energy Web Token, EWT. This may have come as a bit of a shocker to some of you guys, as Energy Web was hardly even in the video last time. And of course, we just also finished our introduction to the Energy Web ecosystem. And well, let's just say I've never been quite this sold on a project, besides from when I really started to research Quant. From how they were formed with their foundation in founding members like the Rocky Mountains Institute, Grid Singularity, Shell, and many others. On the surface, they are just, another layer 1 out there. Really nothing too impressive, but as you look into the project, you realize this isn't like any other regular public permissionless layer 1 out there on the market, but rather it's an enterprise grade layer 1 network that's literally meant to support the energy grid for all these new distributed energy resources coming into play, while linking them all to digital identities. And yes, I know there's other projects that have or are building in the energy sector, but I'd be willing to bet that there's none out there that quite have as large of a moat as the Energy Web Foundation. I mean, when you got guys like the European Union, Google, PTT, Shell, and BlackRock backing you, it's pretty obvious. And so I'm hoping this makes up around 15 to 18% of my portfolio. That exact number is still not quite decided yet, but definitely a decent chunk of it, as I really value the long-term trust that a project will survive regarding regulations and support from large legacy players, and Energy Web has just that. Next up is Constellation Network, DAG. So DAG was pretty much in the same spot last time. Still a very big fan of their project, of course. A lot of really exciting applications on their network that are building. In terms of adoption, I'm definitely hoping to see some more of that in the business aspect. They have a really great network and even applications to host some very innovative projects. Their next step will likely be to have both new and pre-existing businesses build operations on the hypergraph. And of course, that's not to say they've had no adoption whatsoever. After all, they are still working alongside the Department of Defense and in some organizations around space exploration. I really believe they have the tools needed to succeed with a great business but also tech mindset in their team, and some very high-level advisors to add to that. Once we see further development with their state channels and some large corporations potentially building on there, I think we could really see the network effect fully unravel. And so I'm hoping DAG makes up about 7.5% of my portfolio. Next up is Morpheus Network. Absolutely love everything about the project, from the way they operate, their connections and team, to even the community. It's one of the most unique solutions in supply chain for sure. And so I'm hoping MNW makes up about the same amount as DAG does in my portfolio, so roughly another 7.5% or so. I personally think MNW has a relatively good risk reward given their tokenomics, with very little to no dilution in their total supply, and additionally just the connections and adoption that they've already shown from both the public and private sector alike. Next up, we've got Alliance Block, another project I've been incredibly bullish on for a very long time now. They're solving the current issues with DeFi the right way. I think we can all agree by now that the current DeFi infrastructure just doesn't work the way we want it to for true global adoption. Much of this is due to silos within the underlying decentralized finance ecosystems. Another is due to regulations with the difficulty in tracing funds and how they're being used, and perhaps the largest one is just due to a lack of real use cases that DeFi could realistically host, which are all problems Alliance Block is looking to solve. And so I'm hoping ALBT takes up about 5 to 7.5% of my portfolio. Again, don't quite have an exact number for this one yet, but definitely somewhere around there. And then there's Casper and LF0, which I'm expecting these two together to make up about 10% of my portfolio. So about 5% into each. I find these both to be very interesting application layer networks with some very strong backing behind them. The team at LF0 have potentially some of the biggest brains with a very strong advisory board of members that have really relevant experience and connections to entities like the Six Digital Exchange SDX, DARPA, MIT, Stanford, BlackRock, Vanguard, and a lot more. Then with Casper, also connections to some very big names like the World Economic Forum, Hyperledger, IBM, the FBI, Microsoft, Accenture, and other academias like Berkeley, Harvard, and Stanford. Both definitely show the growth that's happened with Layer 1 since the early days, with a much more legitimate form of backing and a lot more uniqueness to them beyond being the typical Layer 1's promise of just, being an ETH killer by doing everything Ethereum is doing but better. Of course, they plan to do that too, just like any Layer 1 would, but they're also bringing a ton of other new features such as LF0's Liminal and Casper's Highway Consensus. As for tokenomics, LF0 has done theirs in a pretty interesting way to where, unlike most crypto assets, they don't actually have a total cap like how Quant does with 14.6 million or Bitcoin with its 21 million. And they're not deflationary either like Ethereum post EIP 1559. But instead, they have a fixed inflation to where a certain amount of A0 tokens get minted and distributed every year between validators and ecosystem development. And while this may concern some people who are very against tokens without a hard cap, I wanted to point out that there's actually nothing too inherently bad if the inflation and supply coming in is done so in a responsible manner. So with A0, the annual inflation is 30 million tokens coming into circulation every year, with their current total supply of 300 million. So year one, it'd be 10% inflation relative to the total supply. Then in year two, there's already 330 A0 in circulation, with the 30 million from last year carrying over, right? So the 30 million coming into circulation now is actually just down to 9.1%. By year 3, it's down to 8.3. By year 4, it's down to 7.7. Year 5, it'll be 7.1. And then by year 10, to when the total supply will be double its initial amount, so 600 million total A0s, the inflation cuts down to 5.2%, and the percentage impact on its inflation just continues to diminish over time. With Casper, they're also kind of similar in the sense that they also have no total supply cap, but rather a fixed inflation rate of 8%. But they do have a way around this to where if you simply stake your tokens, you're rather unaffected by the inflation due to the APY payout negating the inflation percentage. Alright, so we've covered about give or take 95 to 97.5% of my ideal total portfolio. And some of you guys may be wondering, what am I going to do with this other small slot of 5 to 2.5%? Well, that'll be for a variety of things. As you guys may have remembered from the last portfolio update, we had a little section where I had a group of tokens and projects that I either had a very small position towards or would plan to add some of those tokens in the near future. And so there's not really an order to position size or favorites regarding these ones, but more so just a list in random order of projects I have or plan to add a minor position into. And so I still plan to do the same. As I always say, there's way too much innovation happening in this market to truly capitalize on all of it. So instead, I've decided to allocate smaller positions into some projects that I do really like, but don't want as large exposure to, either because they might be higher risk or just have poorer tokenomics. And some of you guys may be wondering, how can a project be good if the tokenomics are bad? Well, this is actually a very common point of misunderstanding that I wanted to address. Let's use QNT as an example. Yes, their project is amazing, and the connections within their team and partnerships obviously speak for themselves. But part of the reason I speak so highly on QNT as my preferred investment is largely because of the distribution of the tokens, versus something say like Hedera Hashgraph, which much like Quant, another absolutely amazing project, with some of the most business innovative use cases I've seen, and overall just a great structure to draw real enterprise adoption. But as for the distribution of the HBAR token with no vesting schedule and a relatively high dilution rate for the time being, is it still an amazing project? Absolutely. There's not many layer 1s that could go head to head with HBAR in terms of fundamentals and connections. But as for tokenomics from an investor standpoint, and again, this isn't financial advice, but just how I, as another investor in this market, no different from you guys, is seeing the tokenomics of HBAR. And well, since we did just use HBAR as an example, of course I do also see them as a great project and one that I do hold a bit of a position in. And for those reasons listed above, is also why they didn't make a bigger part of my portfolio yet. I honestly think everything Hedera has done in terms of their foundation, framework, and vision is actually damn near perfect. It's literally just the token distribution from an investor standpoint, which seems a bit subpar. And that's not a knock on their actual token utility, because there's definitely real use cases to their token. So will I be adding more HBAR to my bag in the future? Yeah, most likely, if they keep developing the way they are and it's in a zone I'd consider accumulating. But do I personally think now is the best time to accumulate with current market outlooks paired with the token dilution still on the table? In my opinion, not so much. But that's just me though. I think HBAR can also be a great long-term hold if you don't care so much for that side of things and just want some peace of mind without having to constantly be kept up to date. XRP, pretty much the same case as Hedera. Great project, great connections, amazing use cases. And there's also the case of their lawsuit, which could be a pretty great risk reward going forward once that's settled and we'll have some clarity. Just again, some subpar token allocations from an investor standpoint. And along with that, they are pretty high up there in total market cap relative to many other tokens, so the total room for percentage growth is inevitably going to be a little more limited compared to some smaller cap utility tokens we look at. Now, one thing I should add for many of these that do have great connections and use cases but subpar tokenomics is that the businesses building out these ecosystems most likely have a reasoning behind why the allocations are like that, and not for basic reasons that many VC diluted projects have, like enriching the early investors, but more so to properly and securely scale and grow out the operations of the bigger legacy names building and backing their project. Which now leads me to XDC, another one that falls right into this category. This is one of the layer ones that I'm most bullish on, with their connections to the global trade finance industry and pushing initiatives with multiple standard setting bodies. But again, the token distribution is also a little iffy relative to the ones that I'm building most of the core of my portfolio around. Now, two exchange tokens that were also previously pretty high up on my list: LCX, Liechtenstein Crypto Asset Exchange, and Unison, ZCX. These are both projects that I'm still a big fan of, but have scaled back in terms of adding towards my position, largely due to the fact that I'm beginning to realize the exchange markets are a sector that's still relatively in murky water. Yes, you could argue these are both regulated exchanges that will be more likely to stand the test of time compared to other exchange projects that are like, FTX or just another spin-off of Uniswap or any other DEX out there. But even with that, the total addressable market and potential growth for an exchange aggregator will 9 times out of 10 be relatively smaller than a application or communication layer. Now, that's absolutely not to say I've given up on these projects whatsoever. On one end, Unison has actually been great with their continued project development throughout the bear market, whereas I'm hoping to see more of the same with LCX lately. They have progressed further along with the adoption of their token sales management platform in addition to some features on their exchange. So I'm hoping to see more of real use cases being developed on LCX moving forwards. And sure, some of you guys may call it jumping ship from one project to another, but as an investor, we should also harness the skill of realizing opportunity costs and not having emotions with our decisions, but rather doing so based on facts and evidence. So yeah, still really bullish on both LCX and ZCX, just more so waiting on the sidelines with what I have before diving in with more capital. Vector Space AI is another one that falls in this category of projects that were previously rather high up on my portfolio list. I love the concepts of the project Vector Space AI overall, and think what they're building is super innovative, and from the start I knew that what they were doing would likely take more time to really have adoption and application fully kick in, as operating in biosciences would probably have some more regulations and restrictions that they'd need to get further clarity on before we can really see some true industry adoption on that end. And so I'm pretty happy with the size of my VXV bags at the moment, and now just mainly waiting for further progression in blockchain from their respective sector to see more progression take place. There's also both Bitcoin and Ethereum, the two undisputed majors in this space. And while I know I talk down a lot on these two, but again, from an investor standpoint, I don't think it's bad to have a small position of these two in your portfolio. Bitcoin, sure, it's relatively useless aside from the narrative it has of digital gold, true self-sovereign hard money, or whatever Michael Saylor's preaching these days. But regardless, I'd argue it's a pretty safe bet to have a small allocation in terms of risk-reward wise, as the market does still tend to follow Bitcoin for the most part. Now, as for Ethereum, again, tons of issues with the project, from the constant delays of ETH 2.0. Does anyone know what's up with ETH 2.0 as of lately, by the way? I've heard nothing but delays. But with what we've seen with the whole ETHgate JP Morgan consensus scandal, we can see not only are they corrupt, but they've been infiltrated by the ones that have been corrupting our economy for so long now. So while, probably not the most ethical thing, there's probably some pretty big backing towards them. And so for that reason, I do still hold a bit of Ethereum. And some of you guys may remember from last time, ETH was actually my second largest holding. But since then, I've sold a bit of ETH and reallocated that to either grow some of my other positions I see greater risk reward in, or just keep some of that in stables for the time being until I see my accumulation targets hit for projects I plan to take a long-term position in. Lattice Exchange, LTX, the trademark exchange and launchpad on Constellation's hypergraph. Haven't really added too much to this position since we last talked, but I am really liking the switch they've made to the Lattice Gateway and how they're going about their operations with being kind of the central hub for everything on the hypergraph. Though one thing that's been happening on the regulation side lately is that there's been a larger focus on launchpad projects with compliance in the States. But overall, still bullish on LTX, and well, if you're bullish on the hypergraph, you're probably bullish on Lattice. And last but certainly not least is Tokenicer Tau. This is a project I've been looking into here and there for the past little while, and one that many others that are in my closer circle who I really respect have been discussing recently too. Its focus is on being a peer-to-peer intelligence market focused on powering a globally distributed neural network to accelerate AI development. And we'll probably be doing an introductory video on this relatively soon. It's still rather in its early stages, meaning it is inherently higher risk, higher reward, and it's actually not on any crypto exchanges at the moment yet. No centralized exchange and no decentralized exchange. The only way you can get their token Tau is through buying over the counter in some of their Telegram groups and on the Tokenicer exchange. But if you do choose to do so, please be careful with that, as there have been people that have gotten scammed or rugged, whatever term you want to use, since it is done in a peer-to-peer manner. Anyways, the Tau tokenomics actually almost exactly follow Bitcoin's, with a total supply of 21 million and a halving cycle every 4 years or so. Just, with more token utility than Bitcoin. But yeah, that's about all we've got for this new updated portfolio goal video I have. And as I've said before, my portfolio isn't quite at this exact percentage of allocations yet, but this is basically a rough layout of what my personal ideal portfolio would look like. And just as a reminder that nothing at all in this video was any form of financial or investment advice. Even if this was a portfolio video, this is what I personally think fits my situation best. Everyone's in a different situation with a different risk appetite and different time horizons. So please, just take this as a sort of guideline and informational research of what I'm building my portfolio around based on the research on regulations and standards with these projects I've looked into. But anyways, that's all we've got for this video. I hope everyone got some great value out of this, whatever it may be. And as always, until next time everyone, be sure to stay safe and keep learning. I'll catch you guys later. Peace.